Welcome back to the Trading Block. It's Kerry with another weekly breakdown. This time, we're going over earning reports. Earning reports are a great way to stay up to date with the company and understand what they've been doing financially. Earning reports, whether you're a short-term trader or a long-term investor, I'd highly advise you understanding earning reports, the information it is divulging, and how to break it down. Now, earning reports give us a lot of good, different information. They give us balance sheets, income statements, and also cash flow statements, as well as net income, sales, expenses, as well as profit margin. Now we find the profit margin by taking the net income and dividing it by our sales. Now let's get to the big thing, EPS, or earnings per share. That's what a lot of people are one of the first things to look at when they get an earnings report. Now we get the EPS by taking the net profit, subtracting the dividends, and dividing by the shares available. Let's get into operation income. Operation income is the income they're bringing in by the business they're doing currently. And when you get the earnings report, it's a good idea to take the operations income separated from mergers, acquisition, company divestments, and also discontinued products or discontinued income. So you can really get a good view of what's been going on just from the company through that. Again, for the mergers, acquisition, you can see where the money is coming from. Now, after 40 to 45 days after the earnings report, they have to produce an SEC form 10Q. What that is a more detailed, even more intricate report for the SEC, but it's also available to you, the trader. And again, once you learn the earnings report, I would advise you to get into the 10Q, but first learn the earnings report because again, it is much more difficult, much more intricate. So learn the earnings report first, and then let's get to the form 10Q. When you get to that and understand it, it's a lot of good information to help you make your trades better. Now, EPS estimates. EPS estimates is a big thing because a lot of traders look for the EPS, and the EPS estimate kind of gauges where if the company is reaching its mark. So let's just say, for example, a company has an EPS of 0.85 earns per share. Now that company only gets 0.83. It looks like that company's not doing well, but sometimes that company could be doing better from the past results. So let's say again, that company for the past 4 quarters had an EPA estimate of 0.85. Right? The first quarter was 0.80, the next one was 0.82, the next one was 0.83, and this last one was 0.84. So even though it's not reaching its estimated EPS, the company's getting better, it's doing better, and if you look at the earnings report and if you see the money is increasing, you see their dividends are rising, and if you see that their income is increasing and their debt is going down, then you can tell that that company's on the rise. But sometimes traders, they see the EPS is not reaching, or the EPS estimate is not reaching, sometimes they sell or dump. Again, take your time, look at the research, and take the time to see if this company is worth holding or getting into. Again, if they're doing better, it's a great way to stay in. Now, the beautiful things about the earning reports is they can do it for you quarterly or annually. So you can look at how the company's doing for the past couple of months and quarters or half a year, or you can look back for the past year or 5 years. So it just gives you a good barometer of what the company is doing, how well they've been doing, and the growth they've been making. Again, I highly advise you, if you're a trader or an investor, to understand earning reports. Get involved in the information to understand it. It's just a great tool to use to help you make better trades and better investments. Hey, my name is Kerry. Thank you for tuning to Trading Block.